General Electric, which of course is a US multinational. It's a holding company founded by Thomas Edison, the inventor of the light bulb. But its business has been somewhat slimmed down since the Jack Welch days. It's now in power generation, which means steam turbines and the likes, wind power, all that sort of stuff. Aircraft engines, a huge business that manufactures aircraft engines for Airbus and Boeing. It's got healthcare scanners and imaging, like MRI scanning machines and that kind of thing, and much reduced financial interests.
Yeah.
Market cap, $259.7 billion. That's a big player, and a price to earnings ratio of 23.3, dividend yield 3.18%.
Yeah, so a very big, solid company, really the infrastructure power company. Huge history, very much changed from the Jack Welch days.
Yes.
That financial services side of it has slimmed down considerably.
And he did that because he liked the smoothed earnings that financial interests allowed him to kind of bring to the market.
Yes, and he felt that there was a whole nother section of earnings that they could capture by financing the infrastructure spend, which are huge capital projects. So he saw the thing working together.
Yeah.
Then the great financial crisis came, and really that, I think, changed the thinking, because that relies on a big balance sheet financing operation. And in a normal market, maybe it's fairly easy to operate that.
Keep sloshing the money around.
Correct. There's liquidity, there's availability of finance, of capital. But the great financial crisis turned that on its head completely.
Yeah. But they had expanded into all sorts of things like retail credit and mortgage books and buying out of, kind of credit cards that were linked to specific retailers in foreign countries. So that was the problem too. They had some assets that really weren't linked much to their core infrastructure clients.
Yeah, they kind of got hooked on this business, and they became a bank essentially.
Jeff Immelt, though, has been at the helm now for a long time. I know some people think he's fantastic. Others think he's like a lefty nutcase and that he should go and be in, Hillary Clinton's cabinet or something. I don't know. How do you see him? Do you think the company has done enough now in terms of its corporate profile, or do you think it could still split further?
It could most probably split further. What he has really done is taken the financial services and slimmed it down completely.
Yes.
What's worth noting is that they had this unfortunate label, is a SIFI, strategically important financial institution.
Effectively, the US government says you guys have got to really just watch yourselves.
So I think his main aim is to rid its GE of the SIFI status, which he did this year. So I think that is a huge impact that he's done, because it really gives a lot of control to the American government over your affairs.
Including whether you're allowed to pay dividends and all that kind of stuff. Well, let's look at the share chart. You'll see it's popped above $30 a share, and then it's fallen back down again. Actually, the interesting thing is back in 2008, 2009, you could have bought them for $7. But the all-time high is like $43 or $45 or something. So you can see it's had a fairly significant recovery, but it's not quite yet at its former glory.
No, it's not. And whether it will actually get to that's an interesting debate. What they're trying to do is restructure themselves into the foremost industrial digital company. That's really where they're trying to go.
With all of that stuff like digital tracking of your aircraft engine performance, or your power station, or your wind farm or whatever, and then it's got all that SCADA stuff and all that.
Yeah, that's right.
Okay, so if it were to break up and spin off things like the medical imaging business, it would feel like that could go, and then maybe they could sell the aircraft engines to, I don't know, Boeing or someone or other. I don't know though. Do you think, would you buy them now at $28?
No, I wouldn't. I think it's a real macro play, and where it's big and where the world is heading, I don't think it's going to struggle to grow.
And as hard as it's working globally on infrastructure projects, it's a little bit iffy out there in the developing world, isn't it? Because like a decade ago, it was like, China was booming, all the developing emerging markets were booming. Now it's like a bit more muted, isn't it?
Correct,
Okay, so we're not hot on that one.
Not on this one.
Right.